So Q3 2026 real estate market outlook. Something to know is that this is for informational purposes only. We're not financial advisors. Do your own due diligence. GC, I see a big bolded normalization thing here. I think you describe it as back to boring,
Back
which
to
is your favorite thing. Tell me more about this,
you know,
normalization.
and normalization is a concept that we introduced years ago, 3 years ago. And I felt it was really important at that time to share with everybody that what would be happening in future years is following a pattern. And this normalization was going to happen. And I wanted to make sure that people were not fearful for the many headlines that were calling for the demise of real estate or single family rental properties or whatnot. It's just normalization. I'm going to show you in a graph what I mean by that in a second. But ultimately, that's what we're seeing here in Jacksonville, and you're seeing that in many places in the US. So all of this noise that has been calling for these drastic actions just has not been playing out, just as it didn't play out 3 years ago or 5 years ago or many, many years ago as people have been calling for these drastic actions. This is just a boring asset class that just works and works and works. And I love boring. Boring works because boring can help prepare for your retirement or your kids or grandkids going to college or preparing to donate to your favorite charity. That's why I love boring so much. And you're going to see that in these numbers.
The median home price, GC, 369. It feels like it's been there, it's been right around there pretty consistently. And yet it also feels like a really high number than what we used to report.
Well, that's true. It's because home prices have gone up and they have continued to go up even in the face of high interest rates, higher interest rates than we all would like. And so what's really noteworthy here is this is 3.9% home price appreciation year over year. That means this is from May data of 2025 to May data of 2026. And so if you look at the home price and last year to this year, the home prices in Jacksonville are up about 4%. That's really surprising, I would imagine, for many people on this call, because all we have read for months and months and months and months is that, and years now, is that home values are declining and home values are going to decline and whatnot. And this isn't the only month where home prices have been up. The last quarterly call, I shared that home prices had been up year over year at that point too. So you're seeing this trend of actual home price appreciation happen. Now, the 3.9% number is interesting to look at, but the number that I look at the most because it smooths out and removes the opportunity for like one good month of home price appreciation is that 6-month trailing number. You're going to have to follow me here just for a second. What you want to do is you want to look at the year over year appreciation rates for the last 6 months and take an average of them. And what that does is it eliminates, one good month or one bad month from an appreciation perspective. So we look at year over year appreciation, but we average for the last 6 months. And this is an industry standard way to look at this and really just make sure that the trend is something that is substantial rather than a one-hit wonder, let's say. And so if you look over the last 6 months trailing for home price appreciation, we are positive again. So home prices actually have been up a little bit over 1% here in the Jacksonville market. And that's why I say it's not just this month where we're up 4%. It's the average of the last 6 months. You're really starting to see this trend develop, which is really good for you guys to know because you're reading articles about things that are saying that home prices are declining or are about to fall off a cliff. The data just has never really supported that, and it's really not supporting that now.
Median days on market, again, this is sales data, right? So this is how long a house gets, if I list my home, my home gets sold within 34 days kind of thing, a little bit over a month. That seems super normal. A month to sell the house.
Very normal and low compared to historical standards. Yes. Again, really fighting this narrative. It is not hard to sell your house in Jacksonville today. It is not a market where you cannot sell a house or that you have to expect a price decline to sell your house. It's a normal market. Normalization is what we're experiencing for those who can cut through the noise here.
Got it. Months of inventory. Explain that statistic real quick, GC.
Yeah, absolutely. We want to have a leading indicator for where prices are likely to go in the near term, say over the next 12 months or so. And so what we do is we look at the number of homes that are on the market and the number of homes sold in the previous month. And if you just think about it like you're a business owner and you've got a lot of inventory and you want to see if you want to raise prices or if you want to drop prices, well, you'd look at the amount of inventory that you have and you'd see how much sold last month and you'd probably say, well, you know what? That's how I'm going to gauge whether or not I'm going to raise my price or lower my price. And in real estate, you can do the same thing. It's called months of inventory. And really you look to see how many months would it take to exhaust the current inventory on the market. And what history shows us is a number between 4 to 6 months of inventory is below the historical average for months of inventory. 6 to 7 is average for historical months of inventory. And then if you get above 7, and the farther you get above 7, you could get to a place where you would see lower than normal home price appreciation. Lower than normal home price appreciation does not mean price decline. You'd have to get to really, really high months of inventory to see price declines. So that's really what months of inventory is. Well, guys, guess what? We still have low months of inventory. We have been consistently below 6 months of inventory almost every single month for the last 5 years. And we continue to be low in terms of months of inventory. So that just means that we don't have enough inventory in the market to satisfy the demand for an equilibrium market.
And we have JAX foreclosure rate, 0.9%. That seems astronomically low.
It is. A normal market has about 10% of all properties as foreclosures. So 10% is the norm. We are less than 1% of all properties in Jacksonville that are foreclosures. And if you really wanted to construct a market that is going to have significant price declines, you really got to have a high foreclosure rate. Right now, there's over $30 trillion of equity across the entire country in homes. So the idea that there is this foreclosure crisis or this foreclosure wave is coming is not real. I've been calling that out for years and years and years that it wasn't going to happen. It hasn't happened. It will not happen anytime in the near future. And that's what you're seeing here with foreclosure rate in Jacksonville, less than 1%. It's incredibly low.
Got it. So sales data seems to be pointing towards a upward trend in the home price appreciation market in Jacksonville.
So yes, sales data, everything I'm sharing with you. The one thing that may not be high and is probably down this year previous to compared to previous years is the number of sales. And so just be very aware when you're reading articles and they're talking about the number of sales going down. You can have a market where the number of sales go down year over year, but home prices still go up. And I think the talking heads have a hard time of separating that. You can have both of those things to be equally true. What many articles are written about is the number of sales is down this year versus last year, and they assume that the market is declining. That's not the case. So home prices are actually going up. The fact that we look at the last 6 months on average and we have over a 1% increase means that you got half of the data points of an entire year here. And so more likely than not that you'll see home price appreciation will get to the end of 2026 overall. So good leading indicator there.
And speaking of what we expect, the normalization, this is a graph that we come to often, right? The Jacksonville median home price over time.
Well, so this is normalization played out like you were mentioning. And specifically what I mean by normalization is the actual median home sales prices should hug that trend line. And so they're going to be slightly above and slightly below. Now, we've seen some unique things in the last 25 years. And there have been some very large times when we went way above the trend line and then equally went way below the trend line. That's not normal. That was the Great Recession. So what is more normal is what has been happening, especially for the last few years, 2 years, 3 years, just we predicted. You're going to see us continue to hug that trend line. And what that means is when you are above the trend line, you would expect to see lower than normal home price appreciation until you cross the trend line. And then you go a little bit below the trend line. And then guess what happens? You start to see higher than normal home price appreciation to catch up with the trend line. And we just are starting to see that higher than normal home price appreciation or, approaching normal home price appreciation here year over year. But, over the next market cycle, that's what we would expect to see is higher than normal home price appreciation if we're going to catch up with that trend line.
Got it. As I see this visually, I know that you and I have been talking about that you like comparing this thing to 2019, and we're going to get into this. If you look here in 2019, kind of like position it is in relation to the trend line, feels very visually similar, GC.
What's another time that we looked at? We said, you know what? That you and I hear on the show all the time. Oh, I wish I could go back to X date and buy more. I wish I could do this, right? 2019 comes up often, and that's because that's before the world changed. That's before COVID. And it's also because there was a lot of home price appreciation after that. So I said, you know what? Let's go back to May 2019, compare it to May 2026, and let's just cut the noise away and look at some of these metrics. So this was a fun little trip down memory lane for me, and I wanted to share it with all of you. But if we cut the noise away and we look at May 2026 and we compare it to May of 2019, you'll see a lot of similarities here. I mean, it is really similar. We're lower for days on market than we were in May of 2019. Months of inventory, we're still below 6 or right. I mean, it was 3 and now we're 4.
Yeah.
And you can see the appreciation numbers are very similar. So just encourage you, stick to the facts, cut all the noise away, and this model just works. There is nothing to be concerned about with this model working, and it just works. We just have to cut the noise away.
It's really interesting because we've talked about it conceptually a lot, how you're comparing things to like 2019, 2018, and to kind of like look at just like visually here on just median sales prices versus trend line, and then visually here on all these other data points and how like strikingly similar they are. Some are a little higher, some are a little bit lower, but overall it looks very, very similar. And to think that this feels like normal, right? Like I would assume that 2019, we weren't doing the show. Like we were talking about doing the show at the end of 2019.
Right.
But I would assume that everything's business as normal back in 2018, 2019, 2017 for JWB.
Oh yeah, absolutely. It was. I mean, and it was a message of normalization and invest in this thing because it works in the long run. And a lot of the same things that I say really every week and I'm saying here today are the same things we've been espousing for 10 years, 20 years.